Hello everyone and welcome to my channel Answer with Numbers, where we identify complicated everyday problems and try to create rational solutions using numbers. Should I rent or should I buy? It's a very important and at the same time a very boring topic. From this video, not only you will learn basic concepts in a fun and easy way, but I'm going one step further and sharing a nifty little tool that I've created to get to the right answer quickly and with a very minimal effort. So let's begin. Hello again and welcome back to Answer with Numbers. Our focus on this channel is twofold: provide comprehensive information in a fun and easy way, and create simple tools that we all can use to get to the right answers really fast and with minimal effort. If you want to stay updated with our latest content and tools, please subscribe to our channel and hit that bell icon. Alright, let's get to our topic now. I need a place to live. Should I buy or should I rent? Before we dive into how to make a decision, let's do a fun exercise. America has a population of 300 plus million. If we consider same number of people in each age group and a life expectancy of 80, around 150 million are between 20 and 60 years of age and have to face a renting versus buying problem. If we assume at least 20% of these people are making this decision annually and half of these people don't have proper knowledge, we are making over 3 million bad decisions every year. So how are we going to approach this today? First, we will understand the basics, and second, we will review the Answer with Numbers tool. So without further ado, let's get into the first section. Welcome to section 1. In this section, we will review the basic concepts that will help you understand the whole renting versus buying situation clearly. The renting versus buying problem actually includes 3 fundamental questions. Number 1, how much initial investment is needed? Number 2, can I afford monthly payments? And number 3, what makes more financial sense, renting or buying? Let's review the first question. How much initial investment is needed to buy? There are 2 components of initial investment when you buy a home. The first one is down payment and the second one is closing costs. Down payment is usually a % of the home purchase value negotiated with the seller, and the closing costs are something you have to pay to close the deal. You can add them both to find out what total down payment is needed. So this way you can calculate how much total money you would need to put as an upfront investment to buy a new home. And then the final question is if you have this money or not. Well, if you do have this money, then by all means go ahead and buy the home. And if not, then the dream home will have to wait a little. Now let's go ahead and review the second question. I have money in my bank for the down payment, but can I afford the monthly payments? To answer this question, you need few more details. Let's first figure out how much total monthly payment you need if you rent, so you can compare with total monthly payment if you buy. For renting, you need to find the monthly rent, the renter's insurance, and some other costs. It may include parking, storage, miscellaneous services, etc. Monthly rent is, well, monthly rent. You have to pay every month to that monster landlord. Renter's insurance is something that will protect you and your valuables. And other costs include parking, valet, as we have listed before. Add them all up and you have total monthly payment you have to make if you rent. Now let's figure out how much totally monthly payment you will have to make if you buy. If you buy a home, the monthly payment is a little bit more complicated. In this case, you have 6 total payments to make. Let's break this down. The first one is mortgage. If you take a loan, you have to pay a monthly payment to the lender. For home loans, this payment is called mortgage. The second one is maintenance and HOA fees. This goes to associations that manage the property or areas around it. Let's look at the third one. It's called property tax. Every year, your county will assess the value of your home and ask you to pay a property tax. This is paid annually, but your bank can break it down into monthly payments. This property tax is income tax deductible also, so you don't actually pay the full amount. Some gets back into your pocket. The fourth one is called PMI. This is another sucker payment. but it is only required if you don't pay enough down payment on the home. Some banks ask for 20% of the purchase value to be paid under down payment. If you pay less, the banks will see you as a risky customer and ask you to cover their risk by requiring you to pay for the insurance. This is thus called private mortgage interest. The fifth one is monthly maintenance. This is something not mandated by anyone, but if you choke the toilet or break your appliances, you will have to pay for that maintenance. The sixth one is homeowner's insurance. This can be expensive these days, thanks to floods, fires, and hurricanes. So if you buy an expensive home, you will have to protect it. Alright, now you have mastered all the 6 costs. You just add this all up, you have the total monthly payment if you buy a home. So now the question is, can I afford it after paying for my Porsche, my childcare, my Gucci bags, and my partying? Considering all these other super important expenses you cannot live without, you can compare total monthly renting payments with total monthly buying payments and ask yourself, what can you afford? This is only one aspect of checking if you should rent or buy, but this is an important aspect. Whatever you decide should make financial sense also. So let's go to the third question. What makes more financial sense, renting or buying? How the hell do we answer this? Let's use some numbers to make it simple. First, I'm going to share a concept with you. Sunk cost. Sunk cost is simple. It's the money you pay directly or indirectly and never get back. So if you find how much money is sunk in renting and buying and compare them, you will know what makes more financial sense, renting or buying. Now let's break down sunk costs for both renting and buying so we can compare towards the end. If you rent, all the money you pay in monthly rents, renters insurance, and other costs, as we saw a few moments back. If you rent, you pay these 3 items and never get anything back. So they are sunk down the drain. But if you buy, now it gets really exciting. In this case, we have to review 7 items. You can go ahead and get a coffee now, but actually it's very simple. Let's begin. So the first one is interest payment. Remember we discussed you have to pay mortgage if you buy and finance the property? Well, some of that payment is actually not sunk. Mortgage payment has 2 components, principal and interest. Principal is your money that is collected in home value as equity. God, another term now. Alright, forget equity. Just think you will get this money back when you sell your home. Simple, right? Now interest is actually bank's income. You don't get it back. But the government gives a portion of this back to you, as you can include this in your tax deductions when you file for your income taxes. The second one is maintenance or HOA fee. We discussed this before. Money you don't want to pay, but you have to suck it up and pay. The third one is property tax. Again, we discussed this before. And as I mentioned before, this is also tax deductible, so you get some of this back. But what you don't get back is down the drain. Hashtag sunk cost. The fourth one is PMI. If you don't satisfy the bank and pay enough down payment, you have to pay this. The fifth one is monthly maintenance. Don't break anything, but something will still break. You will have to pay this. Some of this is also tax deductible, but not a lot, so we can ignore what we can get back and consider it all gone, as this varies a lot. The sixth one is homeowner's insurance. As discussed before, this is gone money. The seventh and the last one is called opportunity cost. It's also called missed investment opportunity. Now this is the exciting part. What if I don't buy home and use the down payment to buy some shares that can generate a higher return? You can also spend this money on Gucci bags and a Porsche and not put the money in down payment. Don't worry about this cost then, there's no opportunity for you. But if you can invest this somewhere else generating more return, the additional return you can generate as compared to investing in the home is the opportunity cost, and this is sunk cost. So the formula is very simple. Suppose we have $100,000 for down payment. If I buy Apple stock, I know I can make around 7% return. But if I buy home, I'm only getting around 5%. So I'm losing around 2% or approximately $2,000 annually in opportunity cost. There, you have all 7 costs reviewed and mastered. All you have to do is add all these 7 costs and you will be able to calculate what is the total sunk cost if you buy a home. So to answer the question, what makes more financial sense, renting or buying, all we have to do is to take the renting sunk cost and compare it with total sunk cost that we have calculated if we buy a home. If your total sunk cost in case of buying is more than total sunk cost in case of renting, then renting makes more sense, and vice versa. So now I know what you must be thinking. How the heck am I going to do all this calculation? This is not for me, so peace. I'm going to the Gucci store. But wait, not so fast. Answer with Numbers is not going to let you make poor financial choices. Let me show you the tool we created, with which you can get all the answers in minutes, and then you can go to Gucci store. So we will review this tool in the next section.